Hello everyone, this is Martin and welcome to this video. It is called the Trade Entry Cheat Sheet, and inside this video I'm going to give all of you an opportunity to get a hard copy of this cheat sheet, especially if you're a brand new subscriber or you haven't subscribed yet, but I'll tell you how to get it in just a few minutes. Anyways, just before you enter a new trade, you have three choices, right? You can take a buy trade, you can take a sell trade, or you can hold. What does hold mean? Well, it means that you're not sure or there's something you detect on the charts which tells you not to take the trade. It's not valid based on your entry criteria. Okay, in last week's video, I revealed a checklist scoring system for grading your trade entry. So the next time you're trigger happy and you want to enter a new trade, you need to pause, evaluate your trade entry, and give it a score for a possible 9 out of 9 points. In this video, I'll give you the trade entry cheat sheet summary, which you can use. You need a constant reminder of what gives your trade entry, a good chance for success. And there's no better way than having a hard copy cheat sheet sit right beside your computer. And as always, I'll give you a quick review on this past week's free trade signals. They were really good, guys. A lot of you guys made lots of pips. So let's see what happened. Okay, this is me right here, and again, my name is Martin, and I'm a proud Canadian trader. You can see the maple leaf emblem here that symbolizes Canada. And guys, I can't wait to get into this video. It's really super important, and it's going to give you a lot of clarity when you're looking at taking trades, and it's also going to help you keep to be disciplined. Now, before I start looking at some of the charts on this past week's trade, the free trade signals, we're going to do that in just a moment. I want you to take a look, guys. This is my humble disclaimer, okay? And the first thing I want to say is my free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. So you can pause this video and read this. The important thing is I want you to risk a maximum 1% of your account balance, okay? And for new traders, trade on demo account in the beginning. Okay, let's take a look, guys. This is what happened this past week. Now, we had one trade that was held over all the way from the previous week, from September 22nd. It was a sell Euro USD signal. And guys, this was a pretty good winner here. It won approximately 60 pips, and it did hit our second take profit level. Okay, so we're going to take a look at the chart in just a moment. Then on September 28th of this past week, I issued a buy USD Swiss franc signal, guys. Again, this was another winner, approximately 56 pips, and it also hit our second take profit level. Okay. Then on September 29th, I sent you an email and said sell New Zealand Japanese yen, and so far it hasn't hit our first profit target level, but I want you guys to keep this trade open, and hopefully in the next day or so it'll come down and hit at least one of the take profit levels. Then on September 30th, I sent out another signal, buy CAD Swiss franc. It's currently in profit, but it hasn't hit our first take profit level just yet. And again, keep this trade open. Okay, so that's really important. So over the past week, the total wins, we won approximately 116 pips, guys. And depending on your account size, depending on your lot size for the trade, you could have made quite a bit of money as well. Okay, so that's it. Let's get over to the very first chart. It's the sell Euro USD. Let's take a look. And this is really important. Okay, first of all, we're going to look at the entry. And by the way, when I send out an email giving you the free trade signals, this is exactly what it looks like. And you can see the new signal, Euro USD, sell entry at 1.168687. So that was right here and right there, guys. So we got in at the close of that candle. All these candles are daily candles. They're not They're not shorter time frames, because we trade at the end of the day and then we hold our trade till the next day. So, we're trading on longer on longer time frames, guys. And honestly, there's less stress. You don't have to keep watching your computer all day. So we got in right there, guys. The next day we had a white candle. It went up and it went against us, but then I issued another email and I said, keep the trade open. The next day went down a bit, next day down a bit, next day down even more. And finally, with this huge candle right here, guys, you can see not only did it hit the first take profit target right there, 1.1657, and with the same candle, it also hit our second take profit candle right there at 116.26. Originally, I did give you a stop loss, so all of you have to get used to putting in a stop loss. Okay, and a stop loss right here, you can see once we enter a trade, we put in a stop loss. It is so important. That is one of the first primary rules, is to always protect your money. And the stop loss in this case is 1.1752. So we had a big winner. It hit our second take profit level. And some of you might have kept your trade open, made a little bit more money because the next day the candle went down. But I did issue another email saying that you should close your trade. It's most likely going to reverse. And again, you can see it has reversed in the last 2 days of last week. Okay, so good, big winner, guys. And congrats for having the patience, not closing the trade when you saw this big white candle, letting it run for profit. Okay, so let's take a look at the next signal, guys, and that was buy USD Swiss franc. Okay, so we got in again. Let's take a look. Here's the entry, 0.9252. We got in right there at the close of this candle or the open of this candle. And you can see what happened on that. On the same day that I issued the buy trade, it shot up. Already we're in a profit, and it did hit the first profit level. You can see that right here. Okay, so it did hit the first take profit level, 92.82, and then the next day with the next candle, it went up even further, hit our second take profit level, and a little bit further beyond that. So if we're trading properly and waiting for a candle to close at the end of the day, not only would your second position, if you open a trade with two positions, your second position would have not only made this profit, but it's gone up to here, and most likely you would have closed it at the top of this white candle. Okay, so there you go, guys. Great trade. This worked out really quickly for you, and it was good for quite a number of pips. Okay, so let's move on to the next trade of the week, and this was sell New Zealand Japanese yen. I sent out an email on September 29th. This is a copy of the email. You can see that right here. And guys, we got in here at 76.91. So we got in. It was a sell trade, right? We got in at the close of this black bearish candle. Okay, let me take that off. The next day it went down just a wee bit. Okay. And again, this is a very bearish pattern right here. This is a full. See where this candle closed, right at the bottom of the close of the candle. So the body of the candle, there's no upper wick, no bottom wick or anything like that. So this is a very strong momentum bearish candle, another strong momentum candle. But then, price takes a breather. Price has gone back a little bit. And I still believe it's going to come down. So keep this trade open. This is very important. Again, our stop loss is 77.77. So if price is still below, and I'm going to draw that in, this is our detail line. You can see that. So if price is still below this detail L line, even though it's gone back a little bit against us, keep the trade open. We only close a trade when the candle closes above this detail line, okay? And if it does close above, then we will automatically close the trade. Okay, so we're still waiting for price to move down, hit our first take profit level, our second take profit level, hopefully. Okay, and so that wraps up this trade. And finally, we're going to go to our last trade of the week. It was issued on September the 30th, guys, and take a look. It was a buy cat Swiss franc, so we got in here at the entry signal. I gave you 0.7344. Okay, so we got in right there at the close of this white candle. I did give you the stop loss. And again, as a reminder, you have to put in your stop loss immediately when you get into a trade. That is one of the hard and fast rules. And also get in the habit of putting in your at least your first take profit level. In this case, 0.7371. So if price moves up while you're not watching the computer, and again, remember, we kind of just put everything away until the next day, but that's important. You don't have to stay up and watch your computer all the time, okay? And that's the beauty of the end of day trading, okay? So anyways, price has gone up a bit. Let me just take that off. So price has gone up. Price is still in positive here, and I do believe that price will go higher. Okay, I do believe price will go higher and hit our first take profit level and our second take profit level. So the key is to have the patience, keep this trade open, and let's see what happens. Okay, so that's how the free trade signals work, guys. All you have to do is follow my program, take my trades, and take all my trades. Don't pick and choose. Take my trades, because you never know when you're going to have another big winner. And if you pick and choose and perhaps not take a couple of trades, you may find that the ones that you didn't pick ended up being the big winners, so you would miss out. Okay, so just take all my trades. Anyways, let's take that off, and now we get on to the main part of the program, guys. And again, last week we talked about, not only did we talk about the entry checklist, what you need to check before you get into a new trade, right? I also demonstrated all the different parts. Now, there are 6 parts to confirm your trade entry, okay? There are 6 parts in total. And for all the different parts, you would give a point. You're going to score your trade entry. Like before you actually take the trade entry, you have to score it out of 9 points, right? So the very first criteria to confirm a trade entry is you need the currency strength. Okay, you need currency strength just when you're going to enter a trade. Then you need market structure. Now, I'm not going to go into detailed explanations. I'm below this video, I'm going to post the video link for last week's video, which not only gives you all the details regarding the entry criteria here, the 6 parts, but also shows you examples on charts. And it's a very detailed video, long video, but it shows you exactly what we mean when we're scoring the different aspects of a trade entry. The third aspect was the momentum. We need momentum to enter a trade. We want to be aware of red flag news or high impact news that may impact price from going in our direction. This is super important. Correct entry data, guys, is probably one of the most important things you have to consider. And we also talk about the technicals. The technicals are like what we basically see in a chart, and we're looking at bullish or bearish trends. And we're also looking at who's in control, buyers or sellers, and so on. So that's it in a summary, guys. And I just want to take that off and then get to the next part. So this is what you're going to receive. It's the entry cheat sheet right here. You can see that, guys. I blurred it out because I don't want people just watching this video who haven't subscribed or are not on my VIP list. But anyways, I've got a hard copy for you, okay, for anyone that's watching this video. To get your free trade entry cheat sheet, you have to, let me just take a look here. you first of all, you need to subscribe or be a subscriber to my YouTube channel. Okay, that's the first thing. And this is mainly for those people watching this video for the first time. If you have already subscribed, you're probably on my VIP list. So this is the second way to get my cheat sheet. If you're already on my VIP list, if you have been getting my free signals over the past few months, past year, then you're on my VIP list and you're automatically going to get this entry cheat sheet. Okay, and for those people that are not on my VIP list or haven't subscribed to my YouTube channel, you can email me. There's no obligation, nothing to pay, guys. It's absolutely free. So there it is. Here's my email address, mskyj007 at gmail.com. Okay, so this is a short video, and guys, if you're brand new to the channel and you're not receiving my free signals yet, we do have a pretty good winning rate, between 70 and 80% win rate. So if you want to receive my free trade signals, send me your email address. It's the only way I give out the free signals. And once I get your email address, I'll put you on my VIP list. Okay, so when you send me an email, tell me you want to receive the free signals. Also, tell me what part of the world you're from, like what country are you from. Just curious, and I welcome people from all over the world. So send your email address to mine, which is right here, guys. You can see it right here, mskyj007 at gmail.com. Again, mskyj007 at gmail.com. Okay, so send me your email and I'm going to put you on my VIP list. And guys, that is the end of this video. Nice and short for you. So cheers from Canada. This is me at my summer home. I do live outside Toronto. I've recently moved, and guys, I welcome you to next week's video. And if you're not a subscriber, you can click on the subscribe button below the video and hit on the bell. Click on the bell, which gets the videos right into your inbox. But really important, guys, send me, click on the like button. It's telling me that you enjoy my videos, that you're getting the educational content, and also encourages me, lets me know that I'm doing the right thing. So click on the like button, and if you have a comment, always welcome to send me a comment as well. Take care, guys, and I'll talk to you in the next video. Bye for now.